in terms of gold, euro dollar, the pound dollar, a bit of a recap of the week as well on what happened this week. Followed the Jackson Hole Symposium event from last week, and majority of the talks happening on a Friday. Interesting enough, because majority of the moves happened after the market has been closed, and then we had yesterday the Australian CPI as well, much higher than what was expected, and showing some sort of strength into the consumption, into the consumer spending. With that, of course, the DXY suffered a little bit of declines, and Australian dollar gained on the back of the weakness of the US dollar. So that was a good trade to be long, and we had that trade long actually from yesterday on Wednesday. Then we had gold as well, being the risk on and risk off market. So this couple weeks, just want to touch base on that and how we go, if it should be a good trade or not, a good moment to be trading gold or not. Based on that, of course, you guys feel free to ask me any questions if you have. But so let's just go for the Australian CPI first, everyone, and have a look into what we got as a move in Australia, Australian dollar. Sorry, someone just wrote a few things. Let me take this off. There you go. So I'm going to open the AUD against the USD right here. We can see on the 1 hour chart that we had a huge move on last Friday. We were trading at 64,300, around that number, and then we had this huge spike. And then yesterday we had the release of the CPI. That primarily, it didn't actually support the Australian dollar, as we can see, it wasn't that positive in a sense, because of course it's inflation. So in the end, yes, the central bank may hold the rates higher for longer, but we can't forget that this is bad for the society, okay? So it wasn't that well in the first couple of hours. And then after that, we had this huge move up that basically higher than the after the release of yesterday's CPI numbers, okay? Still, when we go to the daily chart, we're still in the range of the 64 to 66. So we haven't broke that range yet. My potential target is still on the 66, but we still on that, on that range of 64 to 66. So that 200 pips move, up and down is basically where we're standing at the moment. And I don't think we're going to get any time out from that anytime soon. Okay, so we just let's see how it will go in the next couple months. Cool. That being said, now coming back to the 1 hour chart, we can clearly see that yesterday I've mentioned about the position on the Aussie against the US dollar around these levels here, and the stop losses around here. I don't know why the position is not here, but anyways, I think everyone can sort of remember that. My potential target, my first target is the 66, and after that I'm seeing 68 as my final target. Okay, so based on this, I'm still expecting that we may have an upward pressure into the Aussie dollar. Okay, now let's see the actual numbers. Okay, so Australian CPI ABS. So the ABS is the Australia. It's like the BLS for the USA, but it's for Australia. So the BLS is the Bureau Labor of Statistics, and the ABS is the Australian Bureau of Statistics. Okay, so it's just changing the A for Australia. So if we click in the first link, I'm going to send that to everyone so you guys can also read on your own time, let's say. The consumer price index rose 0.7% this quarter. Over the 12 months to June 2025 quarter, the CPI rose 2.1%. So right now we have the Australian inflation at 2.8%. Okay. Now, when we look to the groups, the main criteria here, as I always like to say, is the groups. What rose the most here, for the whole period. So we can see that the all groups seasonally adjusted rose to 2%. Okay, so it was 0.6, went all the way to 2%. But the biggest rise that we had in terms of percentage was actually the health, and also the alcohol and tobacco, and also the food and non-alcoholic beverages. So March quarter 2025 to June quarter 2025, we were at 1% on the food and non-alcoholic beverages. So to June quarter 2024 to June quarter 2025, we were at 3%. So it's a 2% increase in change. Okay. Also, the alcohol and tobacco from 0.7 to 5.7. So that's a 5% increase. Then we go to the health sector, that was at 1.5 and now it's at 4.1%. Okay. And then last but not least, we had the education sector as well from 0 to 5%. So that these was the three most bigger ones. Now the trim mean inflation in terms of the selected services annual movements, we had a big spike on insurance. Not too sure why. Okay, not too sure. We had also not on insurance. Big pardon. Rents. Sorry, I looked at this one, but then I read this one. So rent. So we had a big rise on rent, and I'm not too sure why, because let me try to explain this very quick so we don't waste much time on that topic. But when you're buying a property, you're buying with interest on that. So let's say the property is $1 million. You have to put a deposit down. So in majority of the cases, you have to put a deposit down of around 20 to 25% of that. So we're talking about you need to have cash into your bank account of around $200,000 to $250,000 to pay for them of the property, and then the rest or whatever, it's minimum 10 to 25%. So the rest of that, the 85%, the 80%, 70%, the 50%, you can finance with the bank. So the bank will give you an interest to pay on that, right? So let's say you've paid $500,000 and now you have to finance another $500,000. So majority of the finances here in Australia, because of the rates are high, they are around 6% per year. Okay, so 6% per year on top of a $500,000 loan is $30,000. Okay, well, actually, this 500,000 you will pay in like 30 years. Okay, so 500,000 divided by 30, it's equal to around 17,000. So you will pay 6% on top of this 17,000. That will be 1%. So that will be $1,000. So you will be paying back for the bank every year around $18,000. That's monthly 1.5K. All right. It's around that. I'm not too sure, but it's most likely around these. How you calculate. That being said, the higher the rate, the higher you're gonna have to pay back. So therefore, when the rates go lower, the rent's supposed to go lower as well. But that's not what is happening here, because we can see that in June, we had the rents up 4.5%. Okay. And also the VAT and other PAT services went 4.6%, mainly because the rents went up as well. So we can see a trajectory. When the rent go down, the VAT and other pet services go down. When the rent go down, goes down. When the rent goes down, goes down. And when it goes up, goes up. So that's very interesting because we know that the most expensive, I would say, the most expensive business expense would be the rent of that property. Okay, where they are having the services being given to the public. So that being said, I still believe that the Australian dollar can benefit from that, being in a sense of the RBA, the Reserve Bank of Australia, will maintain the rates higher for longer because of that. Okay, so seeing that the inflation is not decreasing and that we are most likely continue to have a possible higher inflation now above the target band of the RBA. So for those who don't know, inflation target RBA. The RBA inflation target is around 2 to 3%. And we're literally on top of the band at 3%. So we're at 2.8% now. Okay. So I think that they will step a little bit back, and we can see that on the RBA rate track right here. Let me just wait it to load. Oh, wow, it's taking forever. What's going on? Let me try to re-enter the website. There you go. Cool. So we can see here that majority of the population at beginning of this year, majority of the market was expecting no changes. So because they saw that, right? So it's still no changes. So there's still no possibility of the rates decreasing to 3.35. So at the moment we're at 3.55, if I'm not wrong, or 3.5 actually, sorry. We're at to 3.5, 3.55 around that. Where's the rates at the moment? I should know that. It's at 3.6, sorry. Yeah, so we are at 3.6% at the moment. I don't think we will decrease to 325 anytime soon. So it's just a matter of waiting the inflation to cool back, and it will take some time. Okay, because when the inflation was at 2%, they didn't do anything. We need to know that we're going to have to wait to the 0.8 remaining to go below 2, and then after that we still have to go below 1.9 for them to do something. So the inflation has to be down about 1 to 1.25% for them to do anything with the rates, in my honest opinion. Okay? So for this reason, most likely the AUD will benefit from that, and therefore they will be maintaining the rates higher on this period. Okay? Does anyone have any questions on that? No questions? Wow, it's really windy here. Okay, no questions. Let's move on. So basically what I was saying is that based on that, when the central bank will maintain the rates higher, we have a possibility of the Australian dollar benefit from the flows of these. Okay, so what I mean by this is, if you are an investor and you're looking to invest your money on fixed income somewhere around the world, you know that on US, Jerome Powell just turned very dovish. Okay, so therefore we're waiting for cuts in a sense from Jerome Powell, right? So if we're waiting for cuts already from Jerome Powell, we know that we don't want to put our money there. Now, when we look to, let's say, Europe, we know as well that Europe's cutting. When we look to New Zealand, we know that New Zealand is cutting. When we look to Australia, we was like, the inflation went up, so that's going to pressure the central bank to maintain the rates higher for longer. Okay, cool. I'm going to put my money there because the yields are paying much higher points now. Well, the yields, it's paying 4.29%, so 4.3% in the 10 years, as of the 10 years of US is paying 4.2%. Okay, it's a 0.8% difference. Let me see. Japan 10 years is paying 1.62. Europe 10 years is paying 2.69. So I'm definitely going to put my money on Australia. See? And for this reason, for they to do business in Australia, they have to buy the Australian dollar. And when they do that, basically not them, only one person, but thousands and millions of people that invest around the world, they will see this and it will be like, so for me to do business with Australia, I need to buy the currency. And that's exactly what they have to do to buy Australia. So to invest in Australia. So that will drag the Australian dollar up. And this is the reason why I believe we can get to 66 by end of the next month quite quick. All right. So I'm looking to long Australian dollar, especially now after breaking this stop. We can even wait for a pullback at this of these levels here. Let me just get it to show you of these levels here. And just wait to the market to come back at these levels so we can do a nice long position back to 66 cents. That's basically it. Very interesting. Okay, cool. Do you guys have any questions on that? I don't think so, right? I think it's pretty clear. So my positions would be around these levels, stop losses below here, and take profits above that 66. If the market goes below this level, straight gets invalidated just because there's no sense of me holding this position anymore. Okay? Cool. That being said, let's move on. All right. Now, the next topic is the DXY may suffer declines. Is it a good time to short the rallies? Why do I say that the DXY may suffer declines? Well, there's something happening on USA that I want to see if you guys are actually paying attention on that. What you guys think that is destabilizing, whatever it says. I have to get it right. Destabilizing the USA in a sense that is affecting the US dollar. If you think you know, or if you know, put it down in the chat. Let's see. We already have one answer, and that says traffic. Well, okay. Barry says Trump's push to take over the Fed. Okay. Suleiman say end rate cut. Okay. Tariff. Okay, okay. Anything else? You guys are close, actually. Very close. Interesting. So one person got it right, and that person was Barry. So congratulations, Barry. Barry says that Trump's pushing to take over the Fed, and that's exactly it. Okay, so that's the most problematic. I would say there's heaps of problematic stages on in USA at the moment, but the one that is actually being most of a spotlight, is having a spotlight, is exactly what Barry says. Trump's pushing to take over the Fed. And why is it so problematic? Because it only shows to us that the institution, the central bank, the Fed, the Federal Economic, the one that should have the most and the highest independence, is being pushed over by the president. This is ridiculous. It's really is. Okay. My concern is about that being true and that happening. Okay, because if that does happening, it's just going to show how the Fed is being manipulated for years, for decades. Then we never know. Literally, if a president can take off the chairman of the central bank that has nothing to do with the politics, with the political group, with anything that has to do in terms of society politics, public politics, then what else they can do? It's basically someone that has nothing to do with your work. They come and say, "You're fired. Get out now." It's literally it. It's like the assistant coming to the manager and say, "Hey, manager, you're fired. I'm firing you." That's basically it, and it's going to show me that the Fed has no hands at all. Okay, and then what's going to happen? Well, it's going to happen that the Donald Trump will basically take off and put whoever he wants. Okay, that's basically it, what he's going to do, and that's going to be really bad, at least in my opinion. Okay. So yeah, Barry, you're right. It's about it's about Donald Trump pushing off Jerome Powell. Now, that being said, let's move on, because we don't have much we can do. Unfortunately, sorry, we don't have much we can do, unfortunately, over that. Now, moving on, let's talk about what do I think it can possibly happen with the DXY. Well, I only have one bias in here, and it's down. Okay, my possible target is still the 97, 97 for the DXY. Do you guys have any other perceptions about that? What are you guys thinking about the US dollar at the moment? Are you guys looking to short? Are you guys looking to long? Because I don't see other reasons of not shorting that. Yeah, I'm short as well, KC. So back with that, we need to choose a currency that is actually currency strong. And I'm looking to the euro dollar. Okay. So I'm looking to long euro dollar as it is right here, against the US dollar. Yes, my main target is 120, but you don't need to trade that big. You can trade smaller price movements that will guide you through to euro dollar. That will guide you to 120, sorry. Derry Miller can say that NFP data can change anything, my thought. Yes, I guess it can, but it won't change Jerome Powell being pushed away by Donald Trump. And that's the main concern of the industry at the moment. Okay. So you're completely right. the NFP can change anything, literally, completely anything. But at the same time, we just need to think about what will Donald Trump say then, you know. So let's just wait for the next week NFP and see and pray for the best. So now coming back here, I'm looking to long euro dollar. I'm actually already long on that bottom of the range here. Most likely we're gonna have to we're gonna go and hit the first target at 1.17600, and then from there we may go to 120, okay, or something around those lines. So my options here are either wait another pullback down to 1.16 and buy again, or just enter at market price with a slightly better risk reward in a sense. So just say right here, and then stop losses below this level and take profits at 120 as being my main target. So 79 pips is stop loss, 361 pips take profit. As of this one is 92 pips is stop loss, and as of 393 pips take profit. So slightly better, like 1% better than the other trade, but still very capable of a potential 1 to 3 trade. That said, as well, I'm looking for the pound against the US dollar as we had yesterday. So this trade is already in profit and it's running smoothly. Cool. Looking at the target of 137, 200. My entries point is I don't have much entry option at the moment, so I would just wait for the market to retrace if I would like to enter into the market price again. And yeah, that would be about it, I guess. We have a pretty good option between euro dollar and also the pound against the US dollar. Cool. Now moving over, we have the last topic, and is the gold trading. Okay, so gold is trading on a very interesting path. So let's go into gold now. So let me go for the daily chart. Gold is literally trading sideways. Okay, it has been trading sideways for quite a while. So since pretty much April. Okay, so since pretty much April, after hitting all-time highs, and I've mentioned that we could be seeing this consolidation for quite a while, and we still on that consolidation because there's a reason of that. Because the market haven't decided yet if it's going to be risk on or risk off. It's basically constantly changing from risk on, risk off, risk on, risk off, risk on, risk off, risk on, risk off, and it never keeps in one place. Okay. So my idea here, it's pretty simple. I believe that we can see a trajectory of a continuation maybe to 3,600 by end of this year, but we need some sort of decisive moves from the market. For that, I think also in terms of commodities in that type of case, gold has been the biggest rally of the year. So starting the year at $2,623, now trading at $3,000, well, pretty much 3,400. It's pretty much 29% up. So if you had an investment portfolio and if you only bought gold, you would be up 30% already for this year. Of course, you would have to pay some fees. So let's say 20% up maximum, minimum 20% up. Okay. As of if you sold gold, you would be down 30 to 40%. So that wouldn't be good. And, at the same time you can make it, same time you can lose it. Cool. So on gold, I still believe we may see a potential upside, but at the moment, it's very hard to say. I would love to buy down at 3,200, 3,250, or wait for a breakout above the 3,000. What's the price? 3,440, and then wait for a retest and long that. I'm not willing to trade small movements like on the 15 minutes or anything like that, just because it's very unstable in my opinion. Okay, so I would rather wait for the bigger picture to move than to do anything else. Okay, now, so just going over the topics again. So Australian CPI is higher than expected. Yes, the Australian dollar will be benefited from that. For how long, we don't know, but I'm looking to have AUD against the USD at 66 cents by end of the next month, by September. Where is AUD USD? There you go. So 4 hours chart, easy to show. Yes, so 66 cents would be my target. Then VXY is going to suffer some down movement. So in my opinion, from that, I think that I'm a seller on rallies, not expressing my trade ideas directly onto the DXY, but looking to long euro dollar and that kind of thing. Looking to long the GBPUSD, like as I show, euro dollar longs, GBPUSD longs as well. Good trade ideas. And then gold, I'm willing to trade gold on the higher time frame moves above 2,440 and waiting for a pullback and then buying that. Okay. Cool. US dollar, Japanese yen, and gold. Oil. Okay, oil, let me go quick for oil. Oil is at 63. I believe that oil will probably continue to go lower, and we had already talked about that. Maybe we can see oil at $60 in the next coming months, okay? And then US dollar, Japanese yen. Yeah, so US dollar, Japanese yen, we had a position yesterday as well, of a short position. I'm still believing on that, so I'm just holding tight on that short position. My first target is 144, and then my last target is at 138. Okay, perfect. All right, guys, thank you so much for coming. Have all a great weekend, and I chat to you on Monday, and then of course the webinar is Tuesday, Wednesday, and Thursday. And yeah, if you have any questions, bring next week, and we can have another discussion. Thank you so much for having with me this week, and I'll chat to you next week. Bye, guys.